Good morning and welcome. We are on chapter 13. This is accounting for payroll and payroll taxes. In the last chapter, we learned how to calculate our employees' paychecks and how to figure our withholdings for those and get them their paychecks written. In this chapter, we're going to look at the back side of it and do the accounting process for that. So we can't just write them the check and not record it. We have to actually go in and do our accounting and do our debits and credits. So that's what we're going to be doing. Go ahead and present this. So for lesson 1, recording the payroll, our learning objectives are to analyze the payroll transaction and then journalize the payroll, including the employee payroll taxes. So lesson 1 is pretty short. Different forms of payroll information. We're going to have to record the salary expense. That is the total of the gross earnings for all employees. Earnings, including their hourly wages, their salaries, commissions. That's the salary expense. So it doesn't include any of the taxes. It is only what we have paid them. So we're going to look at analyzing the payment of payroll. Here is our payroll register. That's what we worked on in chapter 12. And now we're going to look at our totals. So that's what we're worried about right now is the totals. We have to record those. So you can see here that we've just broken it into T accounts. And we have our salary expense. Remember, all expenses are always going to be recorded as a debit. And then anything that ends with the word payable. So employee income tax payable, Social Security tax payable, all those end with the word payable because we have to pay those. Just like accounts payable, we owe that money to someone. In this case, we owe it to the government. And so those are a payable, and so they're a liability until we pay them. And remember, liabilities are always recorded on the credit side. We also have cash down here. Cash is also a credit because that's how much money is coming out of our account. So if you look at this, our salary expenses is here. That's everything we've got. Then on this side, we have all of our payables that we need to pay to the government at a later date, plus the cash, which is what we actually had to write the paychecks for. So those are all going to be credits. So for our first transaction, December the 15th, we paid cash for the semi-monthly payroll of $6,269.87. That was the total amount that we wrote the checks for. That included our total payroll of $8,076.75, and then we had deductions of the employee income tax, Social Security tax, Medicare tax, health insurance premiums, retirement contributions. And this is going to be check number 732. So we're going to have to write out a check for this amount. And so we're going to put that in our cash payments journal. This is the amount that we need to have to cover all of our things we're paying. Okay, so we're going to have to write a check to take it out of our payroll checking account and put it back into take it out of our general checking account and put it into our payroll checking account. And so that's what we're doing here on this page. You just see the journal entry back here, which is just showing you the exact same thing that was in this T account. Okay, so we're going to start by putting the date. December the 15th is our date. The account that we're going to debit, that's going to be salary expense. It's always going to go on top. Check number we're writing. And then we're going to put the total earnings. So this is everything. This includes how much we're giving them in paychecks and then how much we're also going to have to pay the government at a later time. We're going to put the amount paid to employees. We've calculated that in the last chapter. And then all the accounts that are going to be credited, which is all of our payables, which are liabilities. And then we'll list all of those payroll deductions that came straight from that payroll journal that we worked on in the last chapter. Okay, so what account title is used to journalize the total earnings column of the payroll register? That's going to be your salary expense. That's what we're putting all of this under. And what account title is used to journalize the federal income tax column of the payroll register? So what it's wanting you to do, just go back and look real quick. Federal income tax, remember I said everything that we owe the government is going to be called a payable. And so this one's kind of tricky. It is not called the federal income tax payable account. It is actually called the employee income tax payable account. So that's one you're going to need to remember. It is the employee income tax payable account, which is what you use for your federal income tax column. And then what account title is used to journalize Social Security tax payable? This one's easy. It is the Social Security tax payable column, account. And then what is the account title used to journalize Medicare tax column? That is going to be the Medicare tax payable account. Okay, so that was the chapter, the section in a nutshell. We're going to go ahead now and do the work together. Okay, welcome back. We are going to be doing work together for Chapter 13, Lesson 1. And in this problem, we are looking at Lakeland's company. This is part of their payroll register for their semi-monthly pay period that was May 1st through the 15th. And all we're going to have to do is put those into T accounts. So we talked about the T accounts whenever we went through the lesson. If you need to refer back in your book, that is on page 379. And basically, we just have to fill these in. So let's take a look at them first and analyze what it is that we're looking at. So the first one listed here is a salary expense. Remember, all expenses are always going to be recorded as a debit unless we're closing or adjusting. So that's easy. Salary expense will be a debit. Anything ending in payable, that's going to make those a liability. And liabilities are typically always recorded as a credit whenever you're incurring those liabilities. So at this time, we're putting those in there to hold them because it's not our money. So we're putting them in as a credit. Whenever we pay them, we'll take them out as a debit. So we're going to use the credit column there. And then cash, remember cash, you always put in a debit if you're bringing in cash into your business, and it's a credit if you're spending cash. Well, obviously, if we paid payroll, we spent cash, so cash is going out, so that's going to be a credit. So all we'll have is one debit, and the rest of these will be credit. So employee income tax payable, we don't have a heading that says employee income tax payable. But if you remember what I said in the lesson, the federal income tax payable is what we're going to call the employee income tax payable. So we're just going to bring that number down here. Social Security tax payable, that's going to be the Social Security tax withheld, so $855.60. Medicare tax payable is the Medicare tax withheld, so that'll be $210. Okay, so now we've skipped over salary expense and we've skipped over cash. We have this number here for total earnings. And so what are we going to do with our total earnings? So the total earnings was $13,800. That's going to be how much our entire payroll cost us for that pay period. So that's going to be our salary expense. That is the total amount. So we're going to go ahead and put that one in here. Now we still don't have cash because we don't know what cash is. Now how can we figure that out? Remember, debits have to equal credits. So here is our debit. Here are our credits. So basically, if we go ahead and just take the $13,800 minus $925 minus $855 minus the $200, that's going to leave us with cash, which is going to be $11,819.30. You can always double check, make sure that your credits all add up to your debit amount. Okay, so let's go ahead and grade step 1 and see how we did. Okay, looking through here, it looks like we got all of our points, so we'll go to the next step. Okay, for the next step, what we're going to be doing is we're just going to take those T account numbers and put them into your cash payments journal. Now, whenever you get to your application problem, I don't think you have the T accounts, but if it makes you feel more comfortable, you can just draw those out on some scrap paper and use those. So now we're going to have to journalize everything. It says we're going to journalize the payments on page 6 of the cash payments journal. We're using the cash payments journal because we're paying money. We always use cash payments whenever money is going out. The payroll was paid by check number 564 on May 15th of the current year. You can hear here are our T accounts, so if we need to look back at those, we can. So whenever you record in your journal, you always start with the debit amount. So which account do I need to look at to see my debit? Okay, remember that these were all credits. Salary expense was my debit amount. So I'm going to go ahead and put in my date. My date is going to be May the 15th. This is going to be salary expense. And it says here that I'm using check 564. And it's going to be a debit amount. We're using general because it doesn't have its own special column, so $13,800. Okay, next we're going to go in order that we did our T accounts. So the next one we want to look at is our employee income tax payable. That's right here. We're just going to list that one out. And we don't have a check number. We don't put a date because it's part of the same transaction. That one was a credit. So we're going to record that one, 925. Okay. The next T account that we used was the Social Security tax payable. So we're going to look at that account. And that amount was for $855.60. Next one we had was Medicare. At this point, all we're doing is transferring them from the T accounts. Now, you don't have to use T accounts if you don't want to. However, and I usually don't like T accounts. However, for this, I think it's a lot easier to use the T accounts because then you can really see where everything's going. Okay, so we have the employee income tax payable, Medicare, salary expense, and Social Security. That's all the lines that we need. However, if you look here, we don't have everything included. We didn't do cash. So if we go over here to cash, it was a cash credit. And remember, your cash credit has a column. So it's going to go here, $11,819.30. So let's go ahead and grade the final step and see how we did on this one. And it looks like we got everything correct. Okay, if you would like to go ahead and do on your own and give it another practice whirl, go ahead and do that. Otherwise, the only thing for 13.1 is to do the application problem. There was no vocabulary because we only had the one vocabulary word. Okay, I will see you tomorrow with 13.2.